Have you ever wondered how some investors stay calm even when the markets are crashing? How do they manage to make clear and informed decisions while others panic? The answer might lie in a centuries-old philosophy that has guided emperors, generals, and thinkers through history's most challenging times. Today we'll talk about Stoicism and its surprising application in the world of investing and finance. Welcome to Financial Resilience, where your finances meet success. Chapter 1. What is Stoicism? Stoicism is an ancient Greek philosophy founded by Zeno of Citium around the 3rd century BC. Its main goal is to achieve peace of mind and emotional well-being, not by controlling the outside world, but through self-control, discipline, and acceptance of circumstances as they are. The Stoics teach that suffering doesn't come from events themselves, but from how we interpret them. Instead of trying to change the world, they propose changing our perspective. The heart of Stoicism centers on virtue, reason, and alignment with nature. Among the greatest exponents of this philosophy are Seneca, Epictetus, and Marcus Aurelius, figures who have left a legacy not only in thought, but also in how we can apply these principles in modern life. And yes, in something as everyday and critical as our financial decisions. Chapter 2. Applying Stoicism to investments and the financial world. Stoicism has found fertile ground in the world of investing and finance, areas that by nature are full of uncertainty, volatility, and fluctuating emotions. Markets are fickle. Sometimes they go up, sometimes they go down. But what makes the difference between a good investor and one who gets carried away by emotions is the ability to maintain inner control. And this is exactly what Stoicism teaches. Stoic principles offer clear guidance, control of emotions, focus on what can be controlled, patience, and preparation for adversity. Applying these principles can transform the way we approach financial decisions. Chapter 3. Stoic principles applied to investments. First, let's talk about controlling emotions. Financial markets are notoriously unpredictable. We saw a clear example of this in the 2008 financial crisis, when the shares of large banks and companies plummeted, and many investors, driven by panic, sold their assets at low prices. Stoic investors, however, refrained from making impulsive decisions and remained calm. Their ability to avoid emotional reaction allowed them to protect their investments and even take advantage of the market downturn to acquire assets at low prices. Second, there's the focus on what's controllable. One of the maxims of Stoicism is to concentrate on what is under our control. In investments, this means that you should focus on conducting thorough research, properly diversifying your assets, and managing risks. Accepting that market volatility, interest rates, or the decisions of other investors are beyond our control is liberating. This does not mean resigning oneself, but preparing. Why worry about what we can't change? Chapter 4. Discipline and Patience. Stoicism encourages discipline and patience, two essential ingredients in a successful financial strategy. Patience is key for long-term investors, like those who invest in stocks of emerging technology companies. A good example is the case of Amazon. Those who bought Amazon stock in the early years and resisted the temptation to sell during its volatile moments are now enjoying huge returns. Stoicism teaches that quick profits often lead to rash decisions and unnecessary risks. The slow but steady accumulation of value, where small victories add up over time, is a more solid strategy. Chapter 5. Preparing for adversity. The principle of preparing for adversity, championed by Epictetus, teaches us to not only expect the unexpected, but to actively prepare for it. An example of this in the financial world is diversifying an investment portfolio. By investing in different types of assets, such as stocks, bonds, real estate, and cryptocurrencies, Stoic investors are better prepared to weather recessions. If one market falls, other assets can offset the losses. This approach anticipates adversity and protects long-term financial stability. Chapter 6. Acceptance of Fate. Amor Fati. The concept of Amor Fati, or love of fate, involves accepting what happens without emotional resistance. In the financial context, this translates to accepting both the good and bad times in the market with the same serenity. A Stoic investor might see a sudden market drop not as a disaster, but as an opportunity to buy at reduced prices. Instead of lamenting losses, they focus on what they can control and see every market change as an opportunity to readjust their strategy. Chapter 7. Advantages of Stoicism in Negotiation and Financial Decision-Making. One of the biggest advantages of Stoicism is decision-making based on reason, not emotions. In a financial negotiation, calmness can be the difference between a favorable deal and a missed opportunity. By keeping emotions in check, investors can analyze proposals objectively, assess risks and rewards clearly, and make decisions that benefit their long-term goals. In this sense, Stoicism also improves risk management. Accepting uncertainty as a constant in life allows investors to anticipate potential losses and plan how to deal with them. During the COVID-19 pandemic, for example, many investors were prepared for volatility. Those who followed Stoic principles did not panic and instead adjusted their portfolios, maintaining their focus on the long term. Chapter 8. Resilience and Optimization. Resilience in the face of adversity is one of the main advantages of Stoicism. In a financial world where ups and downs are inevitable, developing a Stoic mindset allows investors to recover more quickly from market downturns or bad investments. Instead of getting caught up in regret or despair, they move on with greater determination, learning from each mistake and strengthening their strategy. Furthermore, Stoicism helps to optimize the investment process. Investors tend to simplify their approach, focus on what's important, and act strategically. This not only reduces stress, but also improves mental clarity and allows for more effective decisions. Chapter 9. The Stoic Mindset in Building Long-Term Wealth. Stoicism teaches us that wealth is not just about money, but about developing a resilient mindset. In the world of investing, building long-term wealth requires not only financial strategies, but the ability to remain calm in times of uncertainty and learn from mistakes. The Stoic entrepreneur transforms their failures into valuable lessons to improve their strategy. Stoics see setbacks as opportunities for growth, not failures. In addition, Stoicism emphasizes the efficient management of time, the most valuable resource. Investing wisely and creating passive income streams allows investors to maximize their time and build sustainable wealth without compromising their personal well-being. Conclusion. Stoicism is a powerful tool, both in everyday life and in the financial world. Controlling emotions, focusing on what you can control, and accepting uncertainty are invaluable lessons for any investor. By incorporating these principles into financial management, we can cultivate a resilient, focused, and balanced mind, which leads to better long-term results. Remember, in the financial world, as in life, we can't control what happens, but we can control how we react. Serenity and emotional control are the keys to success. If you found this video helpful, don't forget to like, share, and subscribe to Financial Resilience for more insights on how to master your finances and achieve your dreams. See you in the next video, where we will continue exploring strategies for financial and personal growth. Financial Resilience, where your finances meet success.